Hi everybody, this is Bo Yoder for 3D Apex Trading. I wanted to do an update video on our series of forecasts we made using the 3D Apex Trading methodology for gold, silver, and the S&P 500. Now, if you didn't see the original video, I highly recommend you pause this update and go back and watch that in its entirety. It's about 16 minutes long. And I'm going to put the link below this video on Facebook, on the blog, places where we are posting this content, so you can go back and easily reference that. So if you haven't seen that video, go ahead and pause now and go and check it out. All right, great. For those of you who are up to date, let's go ahead and take a look at the gold market. Now, if you remember, in the gold market, we were talking about a head and shoulders pattern that was setting up and was suspicious to me. So we have the shoulders, the head, and then the next shoulder. As you can see from the previous video, and we'll go ahead and reference that in a moment, we've come right back down to this neckline. So let's go ahead, before we move forward, and update the forecast and see what the original forecast was now almost 2 weeks ago. So what do I think is going to happen? Well, like I said, in a free market, you'd probably see a higher low, higher high combo. But in a liquidity-driven market, I think you're going to see a move down to this low. Definitely take out this low, get everyone short, and then one of two things will happen. You'll either get a complete setup and then short squeeze, taking us back up to this 200 period moving average, which would be my price target for that trade, or even better, comes down here, retests those lows, makes a double bottom, and then goes back up. So definitely be watching for that. Okay, so there you have it from the YouTube video. Let's go back to the live chart. And you can see that the first step in the prediction has come true 100%. We've come right down to that neckline. However, we haven't broken through yet. We haven't triggered the head and shoulders pattern in a traditional manner yet. So let's go ahead and use our objective 3D Apex trading measurement tools to get a sense for what is likely to happen next. Now, you remember I talked about in the video that I think we've got scenario 1, which is just a false breakdown and then a big move back up, or even better, scenario 2, which is a double bottom and a move back to the upside. Based on the information that I'm seeing now, we had a very minor bounce off this prior support level, and this yellow line is right here is the 10 period moving average, which currently acted as resistance and pushed the market lower. We can see that we had this big bulge in momentum that we talked about in the last video. Now we've actually come back down and we've created a negative bulge in momentum. So if we look at this previous low and now the most recent swing low, we can see that those two levels are showing an increase in bearish momentum. There's an increase in momentum in the short term, in the mini cycle, right? So actually, let's look at this in terms of major and minor cycles. You got a big cycle here. You got a big up and a big down that's forming, and then within that, let's pick another color. You can see, let's use white. You've got minor cycles, right? You've got up, down, up, down, up, down, up, down, up, down. So within the major cycle, we're still looking at reduced power from this low back here. Kind of just draw that out as a floor of power. We're not anywhere near that. So my original prediction stands. However, I don't think that this little setup and flush scenario is very likely. I think the odds on that certainly could happen, but I think the odds are probably only 30% that could actually occur because of this increase in bearish power. So you see how cool that is? Not only was I able to predict the market, over the last 2 weeks perfectly to the setup point, to this big liquidity pool that we spoke of in the original video, but now, actually, let me clear out this mess so we can take a look at it again. Now I can actually predict that we're very much more likely to come back down and make an equal or double bottom scenario. So now this is a great pattern for us. We call it the fast second, because if you go to business analysis, you see a lot of companies that go out, they do extraordinary research and development. They take a lot of risk and they develop entire new products, or which may end up being industries. The MP3 player is a great example. There were a lot of companies that really thought that people would be interested in digital music, but nobody knew that was even a possibility. So they spent a lot of time and effort and took risk on that. And then Apple swept in and not only took over the MP3 market almost completely with their iPods, but they created a lot more profitability because they didn't have to invent a lot of this technology. They could just license it and make it better. And that is the fast second. That's where a lot more money is made with a lot less risk. So we love these retest type scenarios, especially when you've got clean power readings to confirm them. So 2 scenarios now moving forward. One, we get a little bit of a bump here in power, a slight push down, and a retest on the lows. And that would be great because it would be a lot less power than the previous low. That would indicate the market is really weakening in terms of its bearish sentiment, and there's a high probability for a significant reversal there. The other scenario could be that we get a huge bulge in power and a really sharp, dramatic push to the downside, in which case that would really tell us to stay away from this market and look instead for some kind of a stronger breakdown and a more panicky type low. So either scenario shouldn't be, well, it shouldn't be fearful, but it shouldn't actually have any true emotion attached to it. If we get the equal bottom, that would be a very nice trade. If we get the sort of non-confirmation of a extraordinary bulge in power to the downside, that tells us that even cheaper prices are coming. And why would that be a tragedy? You know, you sit on the sidelines and you wait for the asset to get cheaper and cheaper. And you know, everybody likes it at 100. They'll like it that much better at 50, right? So that's the beauty of 3D Apex. Not only does it tell you when the odds are very high for you to take a trade, but it also helps you define when the odds are high that you can get a much better price if you just exert a little bit of patience. Okay, so that takes us through the gold market, and again, this is the GLD, the gold index, well, the gold trust, which is a proxy for gold. It's just a real convenient tool to use for analysis, but you can really trade these opinions in the gold market in any form, be it physical gold or a derivative gold in terms of a futures contract, or again, one of these ETFs. All right, let's go on and now and do the same thing in silver. So first, let's go back to the prediction on YouTube. All right, here's the videotape. That it's doing so with waves of higher momentum. So you actually are having power building to the upside. So even though the price action isn't all that bullish, the power is telling you that good things are likely to happen. So I'd definitely be looking for this market to hold somewhere in this support zone. Maybe a little false breakdown, or maybe a retest of chart support down here around 1980 before it reverses. But I would definitely expect this market to reverse and reach back up to test its moving averages and its prior high right up around the 2340 area. All right, so now let's go back to the live market. And you can see the price has done exactly what we expected. It's come right back down, currently at 1960, so it's right in that same support zone that we defined earlier. But look at what's happening with power. Again, this is all in context. Power in itself isn't very useful. It's how power is reacting in terms of price and previous price levels. So once again, if we take a look at the previous low, which was the peak in bearish power right there, we actually have our new low, if this were to be a swing low in the future, that's significantly lower in price, right? Price is pushed down, yet power is pushing pretty radically to the upside. We have a divergence here in power and price. That tells me that my scenario is really unfolding beautifully, and perhaps now we can say with accuracy that silver is close to a setup. If silver forms a qualified reversal candlestick in the next couple of days, I would take that as my entry signal. So really nice to see that. Again, this is sort of a mid-trade correction. We're not actually at the trade point yet, but so far the prediction is unfolded exactly as we had talked about a couple of weeks ago, and we're nearing the potential for that entry point. Now remember, for 3D Apex trading students and for all of us who use this methodology, a trade entry takes 3 steps. The first step is that the market must be conducive to reversal, which is what we're looking at here. This market is showing signs that it will be likely to reverse. Step 2 is that the market needs to form a price pattern which would offer confirmation that the reversal is actually beginning to occur. And that's beginning to happen here as we reach down to test areas of support. And then step 3, the final step, which is really our trigger step, is we have to see a qualified candlestick pattern which tells us that the market has reversed. So if you think the market's going to reverse, it tests the area that you think will be important, and then it forms a price pattern to confirm the importance of that level, and then it actually does reverse and form a candlestick pattern to trigger your entry. That's the highest probability you can ever get in a market for a profitable outcome. And that's by being that careful and that disciplined, that's how we're able to be this accurate, as you've now seen throughout a number of live market predictions that we've made, both in our training sessions and also these YouTube videos. And for those of you who haven't been able to join us, I highly invite you to come out to a webinar training session. Go to themarketdoctor.com, themarketdoctor.com, and the times and dates that we're currently running are available there. But don't hesitate. We're basically doing these now until we build up. Our training is very participatory. We deal with a lot of people in a one-on-one or very small group setting, so we fill up pretty quickly. And once we do, we'll halt these webinars until we finish with that cohort and are ready to open our doors again for the next group of students. So themarketdoctor.com. Join us for a webinar. We look forward to seeing you there and showing you some of these things literally live and in real time. Okay, so we've gone through gold, we've gone through silver. The final chart to look at is the S&P. All right, again, let's go back to that video made now a couple weeks back and follow through on the prediction using real time. So here's the videotape. Clear evidence on the weekly, and that evidence is backed up by the daily chart that we have power going lower and lower and lower each time that we have a new bullish surge that takes us off to new highs. So what do I think the market's going to do? Well, very much like the gold market, I think the best trade is probably coming. It's not here now. I would definitely not go short right at this moment. I think you can learn a lot from this little dead zone up here. I think that's what we're going to see. I really don't think we're going to see a real panic as we see here. I think we're going to see some choppiness. We might get a pullback down a little bit to these areas of support around 173, 174. But I really think that the trade to the short side is going to be on one last exhaustion. So if we get one more push to the upside that immediately fails, that would be a great trade and something that I'd be interested in participating on. So there you have it. I mean, it's so much fun for me to do these videos and throw them out there. You know, some people do these videos, talk about their market predictions and are worried about, you know, the outcome, and it's so much fun to be able to throw some real solid information your way. Hopefully now you've been able to see a couple of these videos and start to build some trust and hopefully some astonishment in the accuracy that we're able to get here day in and day out. I mean, look at what happened here. Market chopped sideways, as I said. It came right back to the 20-period moving average, as I said, and now exactly the prediction that we talked about has come true, what, almost 2 weeks later. We're getting this exhaustion move to the upside. Now look at what's happening during that exhaustion. We have price radically higher, right? What, almost 3 points higher, and yet the power hasn't even been able to break above the dead zone, the midpoint here, the neutral level. We actually still have bearish power on a radical new break to an all-time high for the S&P. That's a really strong and powerful indication. Now, as I do this, it's midday on, what is today? Tuesday, the 18th. Let's make sure that's Tuesday, right? Yes, Tuesday. We're starting to see a little bit of a reversal in the market. If this market were to close at the midpoint of the previous bar or below that previous bar's low, that would be a qualified candlestick reversal pattern, and that would be a huge short signal for me. So I'm pretty excited by what we're seeing today, and really looking forward to the close as a confirmation signal to get some shorts off and hopefully capture some movement to the downside in the S&P. So that was really my trigger for bringing this video to today. I wanted to show you those three different strategic outlooks from a couple weeks ago and how closely each and every one, I mean, we're 3 for 3 here in terms of market predictions. So hopefully you can turn this you know, sort of the entertainment value that you've had up till this point into some real cold hard cash as we begin to enter true possible entry points for the S&P and the silver market. Again, gold I think still probably has another week or so if it's going to make that equal bottom and give a power confirmation. That's going to take some time, but I think the S&P and the silver market are probably a lot closer to confirming with that candlestick for entry. And once again, we won't leave you hanging. We'll wait and let this unfold a little bit, come back, take a look at the predictions, and then move forward from there. So look forward to seeing you again. Go ahead and like us on Facebook at 3D Apex Trading. You can search for us there and grab us. Again, I'll put some links below this video to make that easy for you. But that'll make sure that you see the next update and you don't miss out on the outcome of this trade idea. So there you have it. As always, thanks for listening. My name's Bo Yoder for 3DApexTrading.com. don't forget to visit us at themarketdoctor.com, and I look forward to seeing you in a live session very soon. Thanks for listening. Good luck and good trading.